Welcome to the Senior Podcast Show. I'm your host, Corey Lear. I am here with a whole group today. Makes my heart so happy. This has been a long time coming. Of course, we have the Senior Company's founder, Paul Burkhart.
Hi, Corey. How are you?
I'm happy that you're here. And then we have Chuck Dibb here. He is one of the owners of 3D Advisors, Inc. His counterparts were on a previous show, so we're glad that we were finally able to get you on. And then we have Evelyn Jagger. She is the internal wholesaler for 3D Advisors, Inc. And we'll let her get into that in just a minute about exactly what that means. But welcome to the show. I'm glad to have you.
Thank you for having me.
Thanks for being here, guys.
Of course. Thanks for having us.
We're excited.
Like I said, your brother Matt and your business partner Jim were on the show previously educating our audience about life insurance and long-term care insurance, how important they are, what exactly those things cover, how to get them, what age that they should be looking and getting information on those things. That was really interesting. I learned so much from them. They made light of it. They made it fun.
Yeah, it's almost like they know what they're talking about.
Almost. And you can just feel that passion, and I know that you're gonna be the very same. So, like I said, we'll link that in down below. I definitely encourage you to watch it. But today we're here to talk about annuities.
Mm-hmm. Yeah, we're excited to be here and be able to talk about that and kind of how they fit and where they're appropriate for different customers. So yeah, happy to talk about it.
I'm glad that you're here because there's a lot of commercials for them on TV. And I really think a lot of people don't necessarily know what they are. So, but before we get into that, I do want to talk a little bit about your history. So can you tell our audience a little bit about your background, a little bit about 3D Advisors, Inc., before we get into it?
Yeah, well, the kind of 30,000 foot view is that Matt and I started at a meat market when we were 16 and 14. And and the two brothers owned that market. And we always, because they were so cool, we just dreamed of owning a business together. So we looked at different things, and eventually we started 3D Advisors. In 2011, we worked in the brokerage industry for a friend before, and then decided to start our own shop. And here we are 12 years after now. And it's amazing to kind of see where we started and where we came from, and been able to add some amazing people like Evelyn to our team. And Paul and Corey, you got to have the right people on the bus to be able to kind of go where you need to go. Yeah. So we're thrilled to have a great team behind us and be able to kind of educate customers and help them along the way with all these different complex topics.
I love that it's family too, because so many times families don't necessarily always work well together. But
Evelyn, what do you think? Do we work well together or no?
I think so. I think we work well
most of the time.
And she actually stole the words from my mouth. I was going to say family. So absolutely.
Yeah, I think that's great. Evelyn, do you want to have a chance to talk a little bit about your background and when you started at 3D Advisors?
So December 2018, I met the 3Ds. My previous job, which I was working at the Rochester Chop House as a waitress, and they had a little too much to drink. And then, some things happened and they hired me, no experience. And I'm super grateful. Been with them since 2018. I'm kind of a hybrid, internal wholesaler. I handle with, mostly pre-sale, product knowledge, applications. Obviously, it's 2023. Everything's moving electronic. So helping a lot of the people we work with get familiar with these processes. And I work closely with a lot of the advisors and agents that we work with as well. Yeah.
That's amazing how you start in one and then you look at your life.
My history
a few years later.
And never thought you'd be doing this.
I joke about it a lot. Yeah. I mean, it's changing every day. So I'm always learning, and it's just refreshing, not being in such, you're doing the same thing every day, working in a restaurant, it becomes mundane, and this is very different.
Oh yeah. It challenges you in a completely different way.
Yeah.
I mean, I was just telling you guys the same thing behind the scenes, right? Having all of these different guests on and being a part of the Senior Network, I've learned a million things already. So,
and I'm excited to learn today.
Yeah, I'm about to add annuities to my list. So
it's a good time for that.
Yes.
So what is an annuity?
Yeah. In its simplest form, it's a contract between a policyholder and an insurance company. And it's a contract to offer a guaranteed stream of income for someone's lifetime. That can never change. It can never go down. It's guaranteed income. So people can kind of take that worry off the table when they're approaching retirement and they know that they have a certain amount of bills in retirement. Let's say it's $3,000 or $4,000 a month. They can take a certain amount of money, guarantee that income, and not have to worry about it. They know that all their bills are paid for. Now, there's a lot more that can go into annuities,
Yes.
right? That's a very simplistic explanation of one. There's fixed annuities, there's fixed indexed annuities, there's multi-year guaranteed annuities, and we can kind of get into all that and
Sure.
where they fit. But yeah, it's a very simple contract between an insurance company and a policyholder. We're going to pay you an interest rate for a certain amount of time, and then you can turn on income forever if you want to. Yep.
So in recent years, the popularity of annuities has been on the rise.
Boom. Incredible.
Yeah. Well, again, things are increasing and people need to find other ways to make sure that they can take care of themselves in retirement. So the total U.S. annuity sales surged to $310 billion in 2022, which is a 23% increase from 2021, which is mind-blowing. But it says, I read a stat that said in 2022, the total U.S. fixed annuity market reached $208 billion, which is a 60% increase from 2021. Why do you think that is?
Well, and we have a very unique perspective because Evelyn, how many of our customers are financial advisors, would you say?
Most of them.
Probably 75% of
75
them.
to 80%, I would say. Yeah.
So it's neat for us because we are working with financial advisors the majority of the time, and they are working with their customers. So we get a full spectrum of what their customers are asking for.
What the trends
And
are.
it's purely being driven by their customers saying, I'm nervous. I don't know what's going to go on with this market. Interest rates are better than they've been in 15 years, since probably 2006, 2007. I love the fact that this insurance company is going to give me a 5-year rate and pay me X, right? Which is way better than I've been able to do in my investments. I'm going to retire in 5 years. I'm in that retirement red zone. I'm freaking out. I don't want my account to go down 20 or 30%. That big R word, recession's been thrown around so much. And I think people are just nervous. So it's been a perfect storm of that fear, interest rates on the rise, bond yields maybe down. So all these different things have come together for annuity rates being great, and income out of these annuities being very competitive for people as well. So people have been jumping all over them, which I think is the big reason why we've seen such huge increases over the last 6 months.
Do you think that, because I'm looking at these years of these stats, like 2021 and 2022, obviously we were still sort of dealing with that COVID thing and lots of people lost their jobs or they had a fear of because they didn't know what was going to happen. Do you think maybe that even played a part in that when they're like, if something happens and I'm close to that age, like what is my other escape plan?
I think, and maybe Evelyn can speak to this too, because we do talk to these people so often. I think something like that, right? A black swan event like COVID, like the 2008 financial crisis.
Right.
I think it resets people's mindset a little bit.
Absolutely.
I mean, what are your thoughts from what we've been hearing?
I agree with you.
Yeah.
Definitely.
So people get nervous and they say, wow, I didn't expect something like this to happen.
Right.
Let me put something away guaranteed so I know that it's going to be there for
Want
me.
to protect what they have and not, lose their principal.
For sure.
Yeah.
Yep, agreed.
And Chuck, you talked about it in its most simplistic form. And as Corey mentioned, you hear the word annuity on TV all the time, but I think the layman person is not fully aware of how it can benefit them in all of its forms. Sure. So as it relates to, the 08 downturn, the most recent downturn, COVID, with the other variable products, how do those mix in today's market for one person versus another? And why do they find themselves making that choice?
Yeah. So we're seeing a lot of sales in what are called multi-year guaranteed annuities. So for example, a current rate on a multi-year guaranteed annuity might be a 5-year rate for, what are the rates right now?
5%.
5%, 5.25%. So someone could say, wow, I haven't seen rates like that in a long time. Someone's very nervous. They're very conservative. They want to take on no risk whatsoever. So they're going to say, I'll jump all over that. Give me that rate for as long as I can get it. Some people might say, I'm willing to take on a little bit of risk for maybe a little bit more reward. So that's where, you might see a fixed indexed annuity fit in. So where somebody still can't lose any money in that type of a product, right? So the worst they can ever do is a 0 return in any given year, but they could earn as much as 10 or 11%, let's say, depending on what caps are and different things like that. So it gets a little noisy in terms of all the different options, but that's why we're there.
Right.
Because
Absolutely.
Evelyn and I look at this stuff every single day.
Sure.
We have resources that tell us everything that's out there, which I think and we might get into it a little bit more, but one of the advantages I think we have is that we work with 30, 40 insurance companies. So we're not only working with one company. We're not a career type system where we only can sell or market one product, one option. We see all these things every day. We know where the rates are. We know what's good. We know what's not good. We know what's good for a consumer. We know what might hurt a consumer, right? So all these types of things we take into account and we look at when we make a recommendation.
Sure.
So I think it's extremely important that we have a best interest responsibility, a fiduciary responsibility to do that for our clients, which are our financial advisors, because they have the same responsibility to their clients.
Absolutely.
they do.
So in economic times like this, I'm sure both of you can speak to this, there's a large diversification of the portfolios going on. 401ks, not doing well. There's a lot of challenges in the marketplace. Where do you find people diversifying their portfolio to put some funding? Where do you think they're pulling from to come on over, take that money over into this area?
I think anything that has risk that they don't want to take on. So if it's a 401k that maybe there's too much risk or they feel there's too much risk, they could take some from there. If they've got an investment portfolio they feel like is a little too risky, they want to take some of that off the table. I mean, almost like, if you're at a casino and you're doing well in blackjack, you want to take some of that off the table.
Sure.
You want to protect it. Because as we all know, once you're up, you can go back down.
Right.
So Evelyn and I, we talk about just things that are guaranteed and fixed. We don't talk about any investment type products because that's not our business. Our business is completely, to make sure we can tell a client, this is what you're going to get. This is what you're not going to get. And, is this an option that you feel like is the best fit for you?
Absolutely.
Yeah.
And I think too, there's not a ton of risk that comes with fixed annuities or fixed index annuities. I think the biggest risk would be people will say maybe a surrender period, but if you're doing right by your client and you have the right situation, then that's really not a risk to them. So I don't know if you have anything to add.
Well,
on that,
yeah,
but
people are looking for these for longer term type
Yep.
product options anyway. So 5, 7 years, 10 years even is not something they're too concerned about.
And what do you find is a good time for folks to look in this direction? And as it relates to our market in the senior world, what type of age bracket?
Oh yeah, in terms of when people are looking at these types of products, yeah. I don't know. What do you think? Most of our customers are.
it ranges so much.
Yeah.
It's 50 to I think 91 is.
Yeah,
Quite a span.
we have
But if you're looking for retirement income, 50 to 60 is usually what I see.
Yep.
So if someone was 50, do you see them doing more like a 10-year?
Yeah.
Then for sure.
Yeah.
But it all is very dependent on the consumer as well. And
What their goals are.
Absolutely.
some people don't want to lock something in for a longer period of time, so they might say, "I'll do 3 years."
There's
or
such a
2
big
years.
conversation around each individual case and what their real goal is and their situation and making sure that, an annuity is the right decision. And sometimes it's not. But I'd say 50 to 60, we're looking at a lot of fixed index annuities with income riders that can last for your entire life and still have a death benefit to your beneficiaries. So
If they have a 3 or a 5, can they touch it? And at extensive penalty, I would imagine? Or?
No, usually most of the things that we talk about will have what are called withdrawal options or penalty-free surrender options. And generally those are anywhere from 5 to 10%. So if you put, let's say, $100,000 into an annuity, you have access to $10,000 a year, let's say.
Okay.
So yeah, there, and there are some that don't have that and may give you a little better interest rate. So those are all things we discuss with our customers and tell them, here's option A, B, and C. Here's what the interest rates are. Here's what those privileges are for you to get at the money if you need it. Of course, if you don't want to put something into an annuity that you're going to need next year, this is money that you want to set aside for a little bit of time and make sure you've got other things that you can use for emergencies or
no-touch savings.
yeah, exactly.
And insurance companies generally won't let a client put too much into an annuity anyway. It's usually 50 to 60% of liquid assets that they would even allow it to be put into theirs because there are suitability standards that need to be met and we need to follow those as well. So, there's times where somebody will call us and say, my client's got $220,000 in their savings account. They want to put $200,000 into this annuity.
Not happening.
Not going to happen.
Yeah.
We can't do that.
Nor
would we do that. Yeah.
Right.
The next day,
And you said what's the percentage there? If it was 220 that they had, would you say max 50?
It's probably 50 to 60% of liquid net worth or liquid assets is what is a general.
So they have a fallback position, and they can, have money for other things should they arise.
Absolutely. Yeah, you need to. Like a COVID or like a 2000.
Yeah,
right? So
like in a 100-year event, right?
Exactly.
Where everybody was scrambling.
Yeah, and
it's no joke. And 08, for a lot of people was maybe not to the degree of this, where it was a world.
Absolutely.
That was worldwide to a degree, but this is like you didn't know if you were going to live.
Yeah.
So
everyone
it's
safe
back.
to plan for. Every 8 to 12 years over the last 25 years.
That is true.
What's next?
So
every decade event, right?
Who saw 2001? Who saw 2008? Who saw COVID? Right? It's impossible to know those things. Mm-hmm. So definitely have those backstops and those backup plans available. For sure.
Right.
I almost wonder too if maybe there's an increase too, because the past couple of years they've been talking a lot about Medicare benefits and Social Security benefits and how those could be on thin ice. And so I'm wondering, no pensions as well. I mean, or very slim to be able to get that type of benefit. And so people are going to have to be more smart and more savvy.
Yeah, it's a really good thing that you mentioned. I would encourage your audience to look up The Baby Boomer Dilemma, which is a documentary that was done a couple years ago. It talks about exactly what you just touched on, the fact that pensions have gone away largely, right? Mm-hmm. A very small percentage of our population have pensions anymore. So kind of creating your own guaranteed income and your own pension. And there's really only one thing that can do that and it's an annuity, right? An annuity can give you guaranteed income for your lifetime that they're not going to outlive. You don't have to worry about, right? So we see a lot of that, and people they want to know what they're going to have. They don't want to be nervous about it.
So my question for you would be, I know that you and your team do a lot of education for those advisors. With that aside, though, if I came to you and I said, okay, I have $50,000, where do I get started? Because I feel like in our experience, Paul, a lot of the time the clients that we do help are scared to ask questions.
Yeah.
So, and I feel like it's because they don't.
The first step is the hardest almost.
They don't have the answers. They don't want to approach some of our senior network partners because they don't want to look stupid or naive. Or
it's not time yet. Maybe I can wait.
Push it off. Right.
We see that all the time.
A big one.
Just what does it look like when that client just like walks through the door and sort of lays out like, this is what I have saved. This is what I'm willing to sort of put away. We talked about no touch savings. So how do you sort of walk them through that? I know you said it varies based on what their goals are, but just to give like our audience like a picture of what that looks like.
Put them in it.
Yeah. I mean, we would ask a lot of questions first, right? Which is kind of what we do every day is, what is this money for? What do you want to do with it? What do you want it to accomplish? Do you need it in the next 3 to 5, 7 years? Do you think you might need it? Do you foresee any emergencies coming up? Any kids that may need college funding? So there's a lot of, I think, fact finding that goes into making a recommendation, right? And then as we mentioned, our main business is brokerage. So we're working with financial advisors. Mm-hmm. So that's a nice feature, as Evelyn can attest to, is we work with thousands of financial advisors throughout the country. And we know which ones do a really, really great job of planning for clients, right?
Absolutely.
So we know what our core competencies are. We know what we're good at. We also know that we work with a ton of financial advisors that are very good at having those conversations and helping clients along the way as well. So we would ask a bunch of questions, I think, first to kind of understand what their goals are. And then we might put them in touch with the right financial advisor that would be able to kind of really guide them based on what those objectives are. Does that answer it, kind of?
Yeah. Okay. So my question then would be, if someone was coming in saying, I know I need to make some decisions for my next 10, 20 years, how do you help them decide, is it annuity? Is it life insurance? Is it both? Besides, I know you guys have, Matt, your brother was saying, like, we have this amazing system. We can input all this and it spits out all these different options. But obviously you do that fact finding. What are sort of the differences for our audience between those two things? Because you can get benefits while you're alive.
Yeah.
So,
So if someone says I need income, I'm worried about having enough income in retirement, then I would say, well, let's look at doing something with an annuity and guaranteeing some income for you. If someone says I have a pension plus my Social Security, I'm not worried about income, but I am worried if I die before I retire, that my family's going to be in some trouble. So then we probably are looking at more of a life insurance option. If someone says, I've got life insurance, I bought a big policy before, I'm good there. I've got a pension and Social Security, I'm good there. What I'm worried about is when I'm 80, I don't want my wife to have to take care of me. So now we're going to look at probably a long-term care option. And then lastly, which Evelyn knows how much I love disability insurance, it just confuses me.
his favorite.
Evelyn's excellent at it. Where would that fit? In your
income
opinion?
replacement.
Income replacement.
I'm worried if something were to happen to me and I'm no longer able to perform my duties at work, how am I going to pay my mortgage and buy my family groceries? So we would look at disability insurance. And of course, with life insurance, it's so much more vast than that, right? You're not always just buying life insurance for a death benefit.
Yep.
We do a lot of business planning, even just today, executive benefits, family protection, of course, long-term care. All life insurance policies have chronic illness riders, which is, something a lot of people don't even know. When I say, you can actually use the money within your life insurance policy to pay for care if you need it, they're like, what?
Yeah.
Like, yeah. You
Not your
really
grandfather's
can.
life insurance, right?
Yeah, no, my grandfather didn't have that, and
Things have come a long
he's in
way.
a nursing home right now, and it would have been brilliant for my grandmother if there was something like this in place. And
Awesome segue.
Yeah.
absolutely. And they had, he was a fireman, a veteran, but it
worked hard.
Yeah, and my grandma still had to spend down their assets and get a lawyer, an elder care attorney, and go to court and, fight for just some of the costs of care. For him to be in a shared room with someone else is $13,000 a month, so.
You guys see it every day.
She really led into what my question was going to be. So thank you for the segue.
You're welcome.
So can you tell our audience anywhere between 50 and 91? I mean, technically speaking, 55, you can enter retirement living on the independent side, and it varies upwards from there. What would be a great consideration for folks to think to actually utilize one of your programs specifically for senior living? Because it is so advanced now. It's taken on a whole new meaning, a whole new life. It isn't the sterile feel anymore. The white fluorescent lights and the empty hallways. It is resort type of living. And there's a cost associated with that, right? The more amenities you want, the more it costs. The more care you need, the more it costs. So maybe this is a way that our listeners can really educate themselves through you guys to basically offset, or get money aside as the years go on, as they approach that, to where that can make those payments so that you don't run into a situation like that.
Absolutely.
Let me ask you a question, Paul. Are you seeing people doing that sort of planning in their 40s, 50s now?
I think it's becoming more
about it?
prevalent now.
Yeah.
I think it's a much wider, broad discussion that's not afraid to take place anymore, because they're becoming more wise to what is out there.
Well, I think for us, and Evelyn would agree, we see every day we get calls. My clients' parents are in a home, and they see how much it's costing now, and they want to start to think about this and do some planning.
Yes.
So it's a great question. And, if you're looking at a place and we add in inflation, someone's 55 now, they want to retire at 65, or maybe move into one of those type of places at 70 or 75. We can forecast, right, what those costs are going to be. And we can back into how much you would need to put in something now, into an annuity now, to give you that income in 10 or 15 years. So those numbers are fully fixed and guaranteed. You would put this much in today, it would grow and defer for 10 to 12 years or whatever the number is. And we would have the exact number that you would need, at that point in time. So yeah, we do that a lot. And people want to take that risk off the table and know, again, that they've got that guaranteed income there to pay for that cost. And then they've got their other stuff over here that they can be a little more aggressive with, or, not as conservative with. Right. So it's having that diversified bucket of income and understanding where you're going to have money coming from when you need it.
Yeah, my wife and I have a family member right now, and it's interesting you brought up the pension. He has a pension, but a lot of people don't now, and he's trying to understand, if I do take this risk, how much do I have with my pension and my Social Security? And, he's got some savings and he's got a house that's paid off, but he's 84. If he goes to 94 and needs extensive care, you can get into 10, 12, as you said, $13,000, $15,000 a month, depending on your care levels. He's still on the independent side and probably will be for a couple of years, but, folks are living longer now. It's a conversation that must be had to prepare for these types of things.
Absolutely. My grandma died at 96. She needed care. My other grandma died at 94. She needed care. Evelyn, your grandpa.
So you're going to 95 at least.
I was turned 82 a couple days ago.
Good thing you know what you're
You got your annuity set up?
I really take care of myself, as you guys can see, right? A little too much pasta from the Italian mother.
Right.
Hey, I just watched that documentary about Italy, and they say that they tend to live the longest. They have the largest elderly population.
Bring on
wine.
the pasta.
That red wine and pasta.
The walking.
Right, exactly.
Interesting.
But there's a lot of things to think about, right, when it comes to retirement and a lot of the risks that are in retirement, not only healthcare, but long-term care. I think people tend to plan for healthcare. They know they're going to need Medicare parts A and B. They're going to maybe get a supplement or an Advantage plan or something.
Yep.
I think the most recent thing I saw is a couple that retires today at 65 to pay for just healthcare, not long-term care. If that were to happen, is somewhere around $350,000 just to pay for healthcare. So that's your out of pockets. That's your hospital stays. That's your whatever, doctor visits, all that stuff, procedures. Throw in long-term care, right? The withdrawal rate, a lot of people talk about withdrawal rate and that 4% safe withdrawal rate. You hear a lot. It's probably more like 3.5 now. But if you need long-term care, that withdrawal rate goes from, let's say, 4% to 11%. So when you think about, can I afford 11% of my income to go just to long-term care costs and expenses?
Huge number.
Probably not. So do I want to think about insuring against that? And our job is just to have those conversations with our clients, right? And does it make sense? We just want to make sure what the costs are, what the options are for insuring against it. Is it a life insurance policy? Is it a long-term care policy? Is it an annuity? Is it, all these different things that are out there now to pay for it? Or would you rather just take the risk and you have enough assets to pay for it if you have to? You're going to have to, right? Because we know
at some point you're going to need something.
Countless stories. All of us have people close to us that have needed it. That I don't know, where am I going to come up with $8,000 a month or 10, or whatever the number is?
And I think if you don't have the conversation, it becomes too late. They come to you when they might be so close to needing care that they can't qualify to get it. So having that conversation, even if someone's just interested in life insurance, just saying, hey, they're 35. Adding a long-term care rider to their life insurance policy is going to cost them pennies compared to what it's going to cost them 20 years down the line when they're actually thinking, oh, this is something I might want to look into getting. And you can still get a preferred rating. You're in good health and you have it when it's there. So
such a great point. Yeah. To think about it.
Annuities, they're a little bit older, but I think, if you're in your 30s and you can afford a policy, it's a good time to look at it. Absolutely.
Definitely. Yep.
One more quick question.
Yeah.
Do you anticipate the boom to continue in this area and in the annuity market? I mean, we talked about those numbers earlier.
Yeah. I think
against this backdrop of this economy.
Yeah. In talking to our customers, which are largely financial advisors, and they're looking at interest rates, they're looking at the markets every day. That's not our area of expertise, but it is theirs. So just hearing what they're telling us, they feel like, the interest rates are going to be at this level or around this level for at least another year before they start to come down a little bit. So I think probably for the next 12 to 18 months where we will see continued, growth in annuities and fixed annuities, indexed annuities, these things that are very appealing to customers that are risk averse, but you want to know what they're going to get and have some very competitive interest rates right now, which haven't been there again for quite some time. It's been since I almost first got in the business where I've seen interest rates this good. So,
Wow.
yeah. So, it's been good in that regard. So we're
The
very
opposite
excited.
of what mortgage.
Yes.
That's what mortgage people are.
Totally different.
Someone's familiar with that.
I don't want to talk about that.
Just closed on a house. Congratulations, Evelyn.
Yeah, thank you. That's amazing.
Should be refining in a couple
Yeah.
years.
Yeah,
Gosh, I
right,
hope so.
right.
I hope you can.
Should be able
As soon
to.
as possible.
Yeah.
Right. So we do see, annuities are, can be used just for guaranteed growth. They can be used for guaranteed income, but we also see them being used for long-term care. So at times we can use an annuity and we can double or triple the amount that someone puts in, where if they needed it for long-term care, then it would be available for that need. So there are those types of things, and we find those work if someone really has some health issues, they can't qualify for a traditional type long-term care policy. It might be easier for them to get approved for a long-term care annuity, let's say. What ones? There's a couple companies that we work with.
Global Atlantic with their 4Care, they have the double or the triple times. And then One America with their Asset Care, they have an annuity funded whole life where you can actually use qualified funds. It's the only product out there to fund a long-term care policy, which essentially your qualified funds go into an annuity within the insurance company, which then pays out over 10 years a whole life policy for long-term care.
Qualified funds are someone's IRA, someone's 403B, those types of things that people say, well, I can use qualified funds to pay for long-term care. You can, in a sense, like there's a way that we can make that kind of streamlined. And a lot of people, when they retire, their biggest asset is typically their IRA. A big majority of people have most of their money in an IRA or 401k that they move into an IRA. So I say, I can't really afford a long-term care policy. Well, we can show you how to take a small portion of your IRA and move it over into this and kind of explain to them how that works and how it could, potentially help them pay for long-term care if it needed. So, the takeaway is there's a lot of different options now that are very exciting to be able to discuss, and probably more options than we've had in a long time in our industry.
Well, probably more options than we have time to talk about.
Oh, yeah.
But I love that you brought that stuff up, because I do think a lot of people think it's this or it's that. And when we had some of the estate partners on that we work with, they really shed a lot of light on those things too. It's not just cut and dry. There's so many options to make it personalized for what you want, what your end goals are, and you cannot be afraid to ask those questions.
It's overwhelming, right? Just like with anything,
Absolutely.
I have to have a project done at my house. I don't know the first thing about it, but I have to call multiple people. I have to try and figure out what it is. What I love and what we do is when someone calls us, we use that decision tree, right? It's like one of those wizards where we're going to ask you a bunch of questions. We're going to eliminate this stuff because it doesn't fit.
Yeah.
We're going to kind of funnel you into something that might, and here's the 2 or 3 options that we think make sense. You look at them, you tell us if you like them, you ask us whatever questions you have, and then, we're happy to discuss those as well. So I think that's the whole thing. When, there's a lot of complexities out there. There's a lot of noise around different products and financial products, and annuities have probably gotten a bad name over the years from certain pundits on different networks and things like that. But so we can help alleviate and understand how they really work compared to what maybe somebody has Googled or thought about or saw on TV.
I do want to mention that too, because when Matt and Jim were here, that's what I got. Same thing from you today. The patience, the passion that you have, the willingness to be able to provide that education to your agents who are coming to ask you, which I think says a lot, honestly. Yeah. If you're the go-to for someone else to be educated, I think that's amazing.
We really try hard, and Evelyn she's so great at this, trying to make the process as easy as possible, because it is even for our financial advisors that work in the space. Insurance is kind of different, and guys don't necessarily know how to fill out an application really well, nor should they. They're great at talking to their customers. Evelyn takes the time. She's so patient with everyone and make sure they understand it. I lean on her because I'm like, hey, I lost track of how this works. Can you re-explain it to me, right? And she's just done a great job of really understanding how all these things work and taking the time to explain them properly and make sure it's the right fit for our customers, who then pass it on to their customers, right? It's super important for us to make the best recommendations we possibly can for each situation that comes up.
Sure. And before you round this out, Corey, a recommendation that I'd like to give to all of our listeners. Obviously, all of our network partners we vet very closely and must fit a certain type of criteria to enter our network. That all comes through me personally. The Dib brothers and partner Jim, Evelyn, the rest of the team over there, they actually take up space in our original office in Shelby Township. We're now in Troy in our studio, but these guys took over part of our office. They're great guys, great family-oriented type of people, very, very down to earth, very level. They're not going to sell you something or try to offer you anything that you don't need or that you're not interested or take you down some path that you might be afraid to enter the conversation in the very first place because of that reason, because of some of the things that go on out there. So I would tell you one of the phrases we use internally for our company is most trusted hands. Anybody out there who needs to work with them from the wholesale perspective, you are certainly in the most trusted hands with Matt and Jim and Chuck and Evelyn, Holly and Jeremy. And did I get them all?
Katie, Renee.
Oh my gosh, they're growing. See, they do a heck of a job. So it's been awesome.
As do you guys. So
Yeah,
it's amazing to see what
appreciate
you guys have
being here.
built, and we're so proud of you and happy to be a
Well,
part of it.
thank you.
For sure.
And so glad that you guys were able to
And
be
you're
here.
smart enough to get good people on board like
Yes,
Absolutely.
I'm very fortunate to have Corey.
Hey, I don't know. How does our audience get a hold of you?
Yeah.
Where do they find you?
Our direct phone number is 800-785-6913, or our website is 3dadvisorsinc.com. Our emails are all available online as well, and you can find us through LinkedIn and through our website. Easy to
You
hold
can find them on theseniornetwork.com.
There you
I'll
go.
make it
You sure
easy
can.
for you. Yeah, absolutely. So you can find them listed on theseniornetwork.com. We again encourage you to reach out to them with any questions. You will not be made to feel silly at all. They're absolutely the educators, as I mentioned before. They are the ones that educate the other advisors. So definitely, like Paul said, in the most trusted hands. If you have any comments, anything you'd like to share with us, show suggestions, you can reach me at kl@theseniormovers.com or at 586-204-8500. Is there anything else that you guys would like to leave our audience with before we close out this? This is a pretty special episode, I do want to mention. You
Yes.
know, not only did we get to round out the 3D Advisors team on this episode, we're also rounding out, I'm going to say, the last episode of season 2.
Yes.
Let's throw it in there. So
Incredible.
more to come in season 3. I can't believe we're already saying that. It seems crazy.
It's going fast and adding up
Seriously
quick.
is. And
Yeah.
so definitely more to come with that. Again, I encourage you to reach out to the team at 3D Advisors Inc. or us at the Senior Companies.
We're excited to be a part of the season finale.
Yes.
Absolutely.
Yeah, we get to do some fun sneak peeks.
It's not goodbye. It's see you later, right?
Later.
Yeah, next time.
Can't wait for next
we have
time.
everybody on.
Oh my
Can
gosh,
you
is right.
imagine?
We might.
Matt, Jim.
You need to expand that to an hour, 2 hours maybe.
I don't know. I thought for sure someone
I
was
have
gonna-
to be in town for that one.
Yes, please.
Yeah.
My goodness.
And just for Matt, I gotta say,
Maybe we'll do it in
hashtag
Florida.
Patrick's Wavy,
Please.
right? Oh yeah, twist his
I love
arm.
this idea.
Twist his arm, why don't you? Hey, I don't know. You brought her in here saying that she wants to move to Florida. You know, we're looking for somebody in the Florida office.
Easy. Take it easy. She's not
This will
going
be
anywhere.
The episode, the one where 3D takes on Florida. Can't
Oh
wait.
yeah. Oh,
I like that. It's got a good ring to it.
There
There you go.
Senior companies take on Florida. Listen, Paul took us a couple weeks ago for a trip to expand the office, and it was amazing.
I bet.
It sounds amazing.
It really was. I mean, we were working hard on the beach.
Cut.
Right. Thank you guys so much. Thank you for having us.
joining us. We'll see you next time on the Senior Podcast Show.